Meetings are being recorded for the convenience of those unable to attend this video conference. A recording and closed captioning will be posted to the BERS YouTube channel following the meeting. Alex, can you please call roll?
Peter Calandrella. Isaac Carmignani.
Present.
Thank you. Janelle Chacon. April Chapman.
Present.
Thank you. Deborah Dillingham.
Present.
Thank you. Natalie Green Giles.
Present.
Thank you. Eric Henry.
Present.
Thank you. Michael Kraft.
Present.
Thank you. Vanessa Leong. Gary Linnon. John Maderick.
Present.
Thank you. Donald Nesbitt. Lindsay Oates.
Present.
Thank you. Kathy Park Price.
Present.
Thank you. Laurie Pudvesker. Thomas Shepard. Shannon Waite.
Here.
Thank you.
This is Janelle. I'm here.
Hi, Janelle. Thanks,
Thanks, Janelle.
Hi.
Okay,
That's a
we
quorum.
have a quorum. The first order of business is calendar item number 1. Noting the minutes of the meeting of the Board of Education Retirement System held on November 24th, 2020. The minutes have been previously posted to the SharePoint site. May I have a motion to consider the minutes from the November 24th board meeting? Natalie, in a second.
John, I'm having a little bit of a hard time hearing you.
Any better?
Yeah, thank you.
Okay. I got Natalie in a second.
Isaac, so moved.
Isaac for a second, thank you. As usual, we are going to do voice votes. When I call out all in favor, if you wish to vote in favor of the resolution, please unmute yourself and respond in favor. Similarly, if you wish to oppose or abstain from a particular vote, please unmute yourself and respond accordingly when I call out any opposed or any abstention. Okay, so all in favor of approving the minutes for the November 24th board meeting, please indicate your approval.
Aye.
In favor.
Hi.
I approve. Any opposed? Any abstentions? Motion carries. Thank you. The next item on the agenda is the executive director's update. Sandy, would you like to share any remarks with us?
Yes, and they will be brief because we have a lot on the plate today. I want to welcome Eric Henry, the new mayoral representative on the PEP. He's a new trustee. Welcome, Eric. I want to congratulate. Thank you. I want to congratulate the member trustees who have been nominated and elected to the board. You have my congratulations and sympathies, John and Chris and Donald and Sean. Thank you for your commitments and the next 4 years. Finally, we have a number of trustees who've signed up for the NCBERS accredited fiduciary program. A reminder that that's still open, and Karen Wong or I would be happy to assist you in consideration of that opportunity and signing you up. That's it for me, John. Thank you.
Okay, thank you, Sandy. The next item on this afternoon's agenda are calendar items 2 through 17, the ordinary business of BERS. Is there a motion to consider calendar items 2 through 17? Shannon on the first and a second.
Janelle, second.
And Janelle for a second. Alex, can you please tell us about the ordinary business of BERS?
Sure. These are all the retirements, death benefits, and refunds that have been processed since the last time this board met.
Thank you, Alex. We will now vote on these items. All in favor of approving calendar items 2 through 17, please indicate your approval.
I approve.
In favor.
Approved, Isaac.
I'm in favor. Any opposed? Any abstentions? Motion carries. The next agenda items are investment-related items that belong in executive session. May I have a motion to enter executive session?
Motion, Deb.
Deb, and a second from Shannon. Let's vote. All in favor of entering into executive session, please indicate your approval.
In favor.
Approval.
Isaac in favor.
Aye.
I'm in favor. Any opposed? Any abstentions? Okay, thank you so much. The motion carries. We are now in executive session. Please turn the meeting off to the public and stop the recording. Okay, we are now back in public session. Alex, can you please report out BERS action in executive session?
Certainly. During executive session, the board voted against calendar item 18, authorization to the controller to commit a portion of the real assets portfolio. That's it.
Thank you, Alex. The next item on the agenda is calendar item number 19, authorization to the control of the City of New York to proceed with the annual implementation plans. May I have a motion to discuss? Shannon, and a second.
Michael.
Second from Michael. These are the annual implementation plans for the following areas: infrastructure, opportunistic fixed income, private equity, public fixed income, public equity, and real estate. And Antonio, can you please tell us about this resolution?
Absolutely, and I will also invite Active Torico and Siegel Marco to discuss each portion of the implementation plan. So one of the things we discussed when we had our investment policy statement meeting was how to make the annual plans into documents that can hold the investment team, Bureau of Asset Management, and our consultants accountable for the recommendations that we're going to give to you. So within your board package, you all saw a checklist of sorts that goes through each of the items that we are recommending for our for each of the implementation plans, one for the private markets and one for the public markets. The private market implementation plan will talk about pacing, how much we're targeting for commitments in each of the private asset classes, and as well as our target manager and fund list. For the public markets, it'll talk about searches that we're going to participate in, major projects that we're asking our general consultant to undertake with staff, portfolio construction, and a potential kind of research on customized emerging manager program. So first, I'll have Matthew Coyne from Active Torico, and then Michael Wright and Vanessa Vargas from Siegel Marco discuss their implementation plans on it very quickly, given our time constraints. So Matt, floor is yours.
Thanks, Antonio. So I've been instructed to be quick, so I'm actually just going to show you 2 slides. So each year you've established your targets for each of the asset classes. As you can see here on slide 5, private equity, you established a target of 9%. That's the top dotted line there. Real estate at 8%, opportunistic fixed income at 5%, and infrastructure at 4%. So you set those targets, and it's our job to help you execute to get to those targets. You're currently under allocated in all 4 of the areas. So the percentages there on the left side is where you're currently at 6/30/2020. So private equity is at 7.5% towards your 9% target. Real estate's at 6%. OFI is the newest allocation. That's just under 1%, and infrastructure is at 2.3%. So that's where we are now and where we are hoping to go. And we expect to reach all these goals between 2024 and 2025. So, how we're going to get there is basically in 2020, you committed just under $550 million to each of the 4 asset classes in aggregate. Your net asset value at 2020 is $1.2 billion in the alternatives. We take that and we model out it 4 separate models what we think you should commit to each of the asset classes to get the NAV to grow to meet your goals. So the way it works is in aggregate in 2021, it's just under $800 million, which is a significant increase. It's basically an increase in each of the 4 asset classes. So private equity this year, we're targeting $275 million. In real estate, we're targeting $215 million, and that 215 is split 100 to core and 115 to non-core. 180 in OFI, and I'll come back to that in a minute. And then the infrastructure is moving up to $125 million. The OFI, again, this is the newest asset class. In an attempt to get you closer to your target sooner, we've talked about front loading 2021. So you'll see 180 million in 2021, then steps down to 135 million in 2022, and then flattens out. The plan here is to get you closer to your target sooner, and then each year we reevaluate. We run these models each year, and then if things stay the same, we'll drop it down to 135. And we've discussed this with BAM, we've discussed this with the BERS staff and the Axia IC and private credit team, and everyone's on board for executing the strategy. So that's basically the plan at a high level. I'm happy to drill into any of the particular asset classes if any questions, but in aggregate, we're talking about just under 800 million for 2021.
Matt, hi, it's Natalie. I just want to say that we had an extensive conversation about this in the executive committee in terms of pacing and manager pipeline and et cetera, all the things that have to happen to make this happen. So obviously the entire board isn't hearing that, but we did have the opportunity to hear that, and it was, obviously we felt very good about what was presented. Can you just articulate the risk of not reaching the goals of allocation within the year, the real sort of financial repercussions of that?
Yeah, I mean, Sandy and Antonio have stressed the importance of asset allocation. So I think the board takes it's a big decision you make. So you set that asset allocation to reach your target return of 7%. So if you're under your targets, your private equity asset class is one of the higher returning asset classes. So you don't have that higher return as a percentage of the portfolio that it should be based on how we're planning out. And unfortunately, that's the way it's played out the last few years. And there are a lot of different reasons, and not passing blame, but within private equity, you haven't reached your target in terms of the annual plan. So last year, the plan was to put $200 million to work, and only 175 got put to work. So it's something we're very focused on for this year. And I don't mind sharing. One of the reasons was a couple deals fell through in legal negotiations. So, New York City has a side letter that not all general partners will agree to. And a couple fell through in legal negotiations, and that's the primary reason that the private equity fell through. But the plan this year is to target GPs that we know we're going to move forward with early and often, and fight for the allocation. You set your minimums, and everyone's aware of those minimums. And if we're not getting them, we need to move on to the next fund.
One additional thing. Oh, sorry. I don't know if you have something else, Natalie?
Yeah, no, thank you. That's helpful for everybody to hear.
Absolutely. One additional thing I add, and you can add a little color to this, Matt, is there, and we put this in your board packets. There is a difference between the plan that BAM initially wanted us to go with and the plan that we are bringing to you today, and that is the planned growth rate. And so, Matt, if you can talk just very quickly about kind of those differences and why we think those differences are important.
Yeah, in the modeling, the denominator in the calculation is very important. So that's your AUM, your net asset value, and how you grow that denominator is very important. So the last few years, it's been a 5% growth rate, and that's the number that BAM and the other plans are using. So BERS is going to be different in that aspect. It's interesting that years ago it was always 7%, and if you back test the models, the 5% was way too conservative, and that's a big part of why you haven't reached your targets. If you're only growing the assets by 5%, and they actually grow by 8%, 10%, then that's a big reason why you're underallocated. So we feel 7% is it's in line with your target rates of return. So you're building the portfolio to meet that 7%, and we feel being overly conservative here is actually going to hurt you. So we think 7% is the appropriate number.
Thank you, Matt. So that, and when you see in your packet in what we're asking you to pass, the big difference is that we are saying using our target return as our assumption for our growth rate. And then if we don't meet it or do meet it, we can adjust from there. But we should go in with our target return assumption rather than something that's below that.
And this is a long-term target rate. I'm not telling you that 2021 plan is going to grow by 7% because I don't know that. But I'm telling you over the next 5 years, the way that Antonio and Michael and Siegel are constructing the portfolio is to reach that 7% growth rate.
Thank you, Matt. Any other questions for Matt? All right. Next, then I'll have Mike and Vanessa talk about the public markets annual plan.
Let me just share the presentation you put together, Antonio. Can you all see the public annual plan checklist?
Yes.
Yeah.
Okay. Okay. So in our public plan that we presented to the executive committee, we discussed maintaining the rebalancing ranges at the sub-asset class level, which would be in line with the ranges that are already in your investment policy statement. The major project plans that we are completing this in 2021 is the asset liability studies expected to be completed sometime in the first quarter of 2021, and the holistic climate change solution review. In terms of searches, we are going to participate in all of the searches that BAM will issue in 2021, and we will review the candidates and complete the due diligence and figure out if there's any need for any sort of change to the overall portfolio in the searches outlined on this slide. We will be completing a structure review, which is kind of like a portfolio construction. How is your portfolio on the non-US equity side looks like today? How does it look versus your benchmark? And if there's any changes within manager allocations that we need to complete. And we will be working with staff primarily on a customized public emerging market program. Happy to take any questions.
Are there any questions from the board?
So John, just one last thing. If before any questions, that ultimately, again, you see these checklists that we wanted to use. We constructed them this way primarily because we do at the end of 2021, we want people to look at this and see whether or not we've met these particular goals. And, you know, questions have been asked about how to judge us in the interim over, you know, given that our investments are kind of long-term. This is how we're asking you to judge us this year. And so judge us by whether or not we hit our targets, and that we said we would. Judge us whether or not we've done the searches on time, and that we've monitored your sub-asset class ranges within the IPS, and that we've done the research. So that's what we're telling you all today.
Stop it.
One quick question on the where it says complete the climate change. I forget the last word. You took the slide away.
Solutions. Sorry.
Is that based on what we just heard? Is that how we're going to go forward on a divestment plan? Just say more about that.
Yeah. So we're. Oh, go, Antonio. Go ahead.
No, that's you. Go ahead.
So we are working internally to come up with a solution that encompasses some of the divestments. So basically, it will be looking at your options. Right now, one of the options is divestment, but also you have other options being more proactive with, you know, the existing companies that are in your portfolio. So we're basically looking at something holistic, coming up to you with ideas on how to track see where things are going from a climate change solution, and then, say divestment will probably be kind of like the last option from our perspective. But I think that, we just want to make sure that the plan encompasses all of public equities alternatives and how to approach a climate change solution that is proactively looking, not just divesting securities.
Yeah, it's fair to say that we're interviewing all the climate change managers independently because it fits with our theme that in active management, we would rather have broad guidelines and have the managers influence and pick the securities or not pick them. For example, have a target for growth in green energy rather than a pure divestment solution. And so not saying we're going to recommend one of those managers, but we're certainly using it as a way to look at the framework of management decisions rather than trustee decisions about stocks.
Okay, so it's a little more proactive than retrofitting.
Yes.
Yes.
Fair to say.
Absolutely. One other thing that's happening, Natalie, and the team has been working on this, is we recently received information from the comptroller's office on how each of our managers have voted on New York City shareholder resolutions. And so we want to incorporate that. So as Mike and Vanessa are working on, interviewing managers and seeing kind of what the strategies look like, also taking into account how our current managers are looking at these issues and putting that all together. I think historically they've been kind of disparate, but we have an opportunity to actually say, okay, here's what our current managers are doing. Here's how they're voting on a record. We need to engage with them on that. And I think so we can have a strategy that encompasses every aspect of kind of what we broadly are calling ESG.
Thank you.
Okay, are there any other questions? Okay, thank you. We are now going to vote on this item. All in favor of calendar item number 19, please indicate your approval.
Approve.
I
In
approve.
favor. Approve.
Any opposed? Any abstentions? Motion carries. Next item on the agenda is calendar item number 20, authorization to the controller to invest, sell, and exchange the funds of the retirement system. May I have a motion to consider?
So moved, Michael.
Michael is a first and a second.
Deb.
Deb is a second. This is a quarterly resolution to authorize the controller to invest, sell, and exchange funds on the system's behalf. Are there any questions from the board? Okay, we will now vote on this item. All in favor of calendar item number 20, please indicate your approval.
Approve.
I approve.
Isaac in favor.
Approve.
Any opposed? Any abstentions? Motion carries. If I'm distracted, my wife is eating a burrito. So next item up is the financial item on the agenda this afternoon is a discussion regarding a report provided by the actuary. May I have a motion to discuss?
Michael.
And a second from Natalie. Sherry, are you here?
I am here. Good afternoon, everybody. Or evening by now, I guess it is.
It is.
No burritos here, but I will share my screen. So each year, BERS publishes what's called the Comprehensive Annual Financial Report. And in that report, there's different sections, such as the actuarial section, investment section, finance section, as well as like an intro section and statistical as well. So in the actuarial section is provided by me, and I forward over to BERS, and they compile this, and it should be issued sometime this month if it's not already. And in the actuarial section, I'll just walk through really quickly. It's 24 pages, but most of it is just the actuarial assumptions and methods that were used, and which is the same ones that was in the valuation report that I had presented to this board about a few months back. So that's just the cover letter here that talks about some of the tables that are included within the section. And then it dives into the actual assumptions and methods. You get more than half of the report are these assumptions and methods, which again, you can find in the Val report. I'm not going to go through all of them. But then after the assumptions and methods, this is where you start getting into some of the data that you might be interested in. This, has salary information as well as headcounts and what the average salary is and how it changed over the last 10 years. This is again headcount information divided into the active members as well as the retirees and the terminated members. This shows you for the retirees who was added and who was removed through the years, and as well as how much of their benefits was increased or was added and taken away. This tells you the contribution history, as well as what the contribution is as percentage of payroll. So BERS right now is about 20% of the payroll. That's a dollar amount that gets contributed to the pension plan. And then here are some funding numbers as far as asset values, liability numbers, the funded ratio, and again, compared to payroll. Here shows the liability and how much of the assets cover that liability. So the first tier is the member contribution. So 100% of this contribution is covered for by this asset value, as well as the retiree liability. And the last portion is the the active members' benefits that aren't attributed for by their own contributions. So about 47% of that is left over to fund for that. And then it goes into some notes and it talks about the contributions for each of the members. So that's the rest of that's the entirety of the actual section of the CAFR. So be on the lookout for that, I guess, once it is published. So that's all I have for this month. If there are any questions about the CAFR, I'm happy to answer it. Otherwise, I'll turn it back over to you.
Sherry, I had a question, and maybe it's more of a Sandy Daniel question about the huge number of active off payroll, 10,525 in 2018. What is that?
So those usually are people who are not working anymore, but they haven't left payroll in the sense that they haven't filed for another status. So you have to file to become terminated vested, and they might not have filed their papers yet.
And Natalie, we have a huge number of subs for Game for Sessions that are BERS members that are not on payroll, but they're still an active BERS member.
That presents some kind of an unusual risk in the liability analysis compared to the other funds.
So they are included in terms of liability. They are priced as if they're actives, which means that they could come back into the workforce and then they could terminate. And if they're vested already, then obviously they would have a liability for their potential future pension benefits. So just the fact that they're categorized as active off payroll, it doesn't mean that we don't account liability for them. So they are accounted for.
Natalie, I just want to add one very quick point, which is that people may have the service to be vested, they just don't have age to retire. Many people simply fall in that category. So for example, basic tier 4 members can retire at age 62, but they move on to another job outside of city or state service at age, I don't know, 50 or something like that. In the meantime, though, they're vested, so they still have a right to collect down the line. So the actuary must continue to account for them on the rolls.
And there is a distinction between the active off payrolls versus the terminated vesteds.
Right, but in practice, we do not record who is vesting at the moment when they leave payroll.
Right, so that's why you have to formally submit papers. But they are accounted for, they're not lost. They're not in a black hole.
Anything else for Sherry? Thank you, Sherry.
Welcome.
Okay, that concludes the agenda for this meeting. The next meeting of the BERS Board of Trustees is scheduled for Tuesday, January 26th. Details to follow. May I have a motion to adjourn? Shannon, in a second.
Michael.
Second from Michael. All in favor of adjourning the meeting, please indicate your approval. Approved.
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 In favor, Isaac.
Any opposed? Any abstentions? Motion carries. Thank you, everybody. We're adjourned. Stay safe. Happy holidays. And everybody
Happy
take
holidays
care.
to all.
Happy holidays, everyone.
Happy
Take care.
holidays.
Have a happy holiday.
Good night,
Bye-bye.
everyone.
Please, everybody.
Bye.
See you next year.